I've thought for a while how do I want to name this title of the video, and now I got it. So the title of the video should be when to not trade. Okay, let's hop on to the higher time frame and let's see what we're looking at here. So for starters, I was looking for this high to be taken here, but in the intraday chart, the price doesn't seem likely. I was looking for this fair value gap to be taken, but price indeed still took out any some sort of PTA raise and just run towards to the inefficiency on the 50-minute here. So when to not trade? When you see the chart, I'm gonna mark out when is the market open here. So as usual, I was looking for this high to be taken. On ES it already been taken here. So on NQ it haven't been yet. So you can say that this is a SMT divergence, but that wouldn't likely be the case since my draw has this high here, so I wouldn't expect there could be a SMT divergence, but not to extend to this level that it might break through here and leave a portion of the high here. So in any way, so before 5 minutes before the market opens, the price went down by a lot during the 9:25 here. You can see the price rushed down lower and my draw was higher here, and this wouldn't be my draw in any way, shape or form because 5 minutes here leaving an imbalance here. I will, if I'm short, I would like it to reuse back the efficiency to attack a lower side here, but instead it moved lower by a lot. So what I'm trying to say here is you need to really define what is your model and how do you want to execute it. Does it is it is the price shaping are within your expectation of the price, or is it not? For me, I think the 925 here shoots down on, and any retracement higher was not in my expectation, and the consideration lower here and inside of the new day opening gap does not support of my idea of being bullish after it ran through here. So this actually tells me to just uh, sit on sidelines and just look at how price are forming during the market hour, and also note that the opening range here are being tagged also. So when the price forming are not within your expectation or your narrative, don't just simply sit on the sidelines and watch what happens next. And you should really have a lot of filters when you trying to trade. Basically, the filters are to prevent any emotional charge responses to price. So basically, uh, I was saying is with a filter and a protocol before you start trading, entering a position, you need to have something like that, something that within your expectation, within your protocols, and you already filtered out the possibility of it going either down or up. Basically, all I'm saying is when you want to have a high probability setup, you want to market to really only be in your favor of drawing lower. If today my bias was bullish. I want to see respecting any bullish PD raise, but today it seems like it destroyed all of them, and changing the bias was not really efficient. So, for example, this void here simply should be used to reach lower, and any 5 minute are just very high after the market open. It's just high recent liquid run, and I do not want to be part of that. You can see the price here are reacting both to the bullish VD array and the bearish VD array, which are the order block here. I do not want to see this kind of signature because it's just forming an uncertainty, unless you can make a really obvious sign they want to go lower, such as consolidation higher, break higher, and reach into the 5 minute, fail to break higher, just a confirmation lower, another fair gap here, reach into it, and just hit lower. That this kind of setup would be optimal for me to enter short, and I know what I want to look for if the price support lower. And this kind of price action just really slow and high resistance, you can say. So it's not really optimal to trade in this kind of environment. Sure, it break lower here, continuation up, breach into this 15 minute value gap here, hits lower, but any shape or form in this market here is not really, you don't want to be inside of this condition because of how price are respecting both levels. It respecting this bullish 15 minute, respecting a bearish, another again respecting the bullish, try to run higher, respecting the bearish, respecting the bullish. It's just not really that high probability of it going over one direction. So you just really want price to only respect a kind of PD array. That will increase your chances of a high entry and high probability setup. So any this time here where I want to signal my setup doesn't exist. Only after 9:43 the first fair gap presented itself, but no retracement back to it. I could trade here back to the first presented fair gap, no problem. But when you see the previous price candle, what it's doing, the previous candle condition, do you really want to take this out? I don't think so, because of how the price are just respecting both PD arrays at different levels. You can see here 15 minute respected and respect another bullish, then going back into the bullish bearish. You just don't want to participate in this kind of environment. So things to consider when you're entering a trade. You need to execute within your expectation of your model, and using filters like only seeing one-sidedness to the market, or having protocols like risk management is needed to conquer this kind of high 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 recent day. Also, you need to demand some excellence, demand some, like, I wouldn't want to say like really good setup, but at least when you're entering, you know the price are only expecting one PD array, and it's within your expectation of a price, right? So once the price are like, you know, high return, even though it reach like a really long, very big move, but unless it's not within our expectation, you shouldn't really do anything with the market, even though it move a big range. You should you should reflect on yourself, how you feel on this day, and don't and monitor yourself if you are having a FOMO, and why are you feeling FOMO? Is it anything here that are within your expectation? And please don't have a lot of model when you're starting out. Just focus on one thing, and only then you can move on to other things, increase your thing, remove some things, and that will be your edge on the market. So having a edge on the market is very important. Also having a model that you can stick with consistently. If you can't, then it's hard to say that you will be consistent making money. The data are important in this kind of day. Just please do a lot of back testing on your model to know that the probability of your model performance, and any tweaks you need to add into the model itself. So think of a model as a tools, like a toolbox. Yes, I have wrench, screwdriver, a saw, and a hammer. Many people's tools, you can say quote unquote, are different. In the tool I would mean model are different. It's not that you must only can stick to one kind of tools. You can have a lot of tools in time. Once you are used to that one tool that perform well, or you can able to execute it well. But I mean executing it well means by consistently following the rules and not breaking it, and uh, using it in a good way, not over leveraging and just using it. Basically, trading are at the end of the day, trading are just a boring probability game. If it's exciting, you know you do something wrong because of the gambling addiction. But unless it's a, take profit and you know what you're doing, that's a good emotion. But within the trade itself, once you enter it, you should be emotionless. Or before you enter it, you should be emotionless. If you're scared, you're nervous, maybe it's not that good of a setup because you don't know what you're doing. You don't have a proper setup. You don't have a high probability setup. High probability setup is a position that you enter with full confidence without any hesitation and fear. That's a high probability setup. Even though it doesn't work out in the end, you still the emotion you have will be enough for you to call as a high probability setup. Even high probability setup fails sometimes. Even nobody can perform 100%, have a 100% win rate on their model. So in those are this this high recent day and not doing sitting on sunlight is the best time you can reflect on yourself or on how you feel on the market when the market moves at such a long range and you didn't get any of it, or you just FOMO and enter off any edge you have. like forcing your edge. I once learned that forcing your edge is just gonna make it dull. So only execute it when the conditions are right and don't force the trade. So if you hurt yourself today, just be mindful and learn a lot. Just reflect on yourself on how you feel. If you, as long as you know what you're doing wrong and you know today you did something wrong, that's the most important part. And nothing that can, nothing, then that is the most important part. And nothing else should matters. Also did some journal on how you feel today. Meditate on it and uh, I won't say instantly change your habit, but try to encourage good habits when you're trading more than a bad habit.